Good morning. Today we are going to see about type of banks. Let's understand the various type of banks in India and what are all the functions, how it operates. Let's understand before going into the different type of bank. There is a broader classification, a scheduled bank and non-scheduled bank. Scheduled bank is nothing but a bank which is covered under second schedule of RBI Act. There are two type of acts. One is the RBI Act, another one is a BR Act. The scheduled bank is basically a bank which is covered under second schedule of RBI Act. That means a bank which is listed under the section 5B of BR Act or second schedule of RBI, where they should have a paid up capital of 5 lakh, which is very minimal, and they should satisfy all the norms and they should protect the interest of depositors. And again, the scheduled bank should be a corporate or it should be a private limited company, cannot be a sole proprietorship or a partnership. What is non-scheduled bank? Non-scheduled bank is a local area bank which are not listed in the second schedule of RBI Act, or this bank which operates in a specific areas like some specific geography which will have some specific objective. So let's go by what are all the different type of acts we have. One is a banking. Under the Banking Act, we have a BR Act, RBI Act, and Negotiable Instrument Act. Banking Regulation Act, India defines, what does it mean by the banking and licensing and cancellations, permitted business, and everything which is defined under the Banking Act or a Banking Regulation Act, which defines how the bank to function. RBI Act defines the functions of RBI and how the RBI is managing the banks. Negotiable Instrument Act, which talks about various negotiable instruments like check, demand draft, demand promissory note, bill of exchange, etc. The criticality is BR Act. BR Act will define what is the functions of bank, what is the permitted business, what is the prohibited business, the licensing, even SLR requirement and audit, winding up, everything which is defined under BR Act, which is a very important act for legal aspects of banking. And RBI Act again, it also gives how the RBI managing the banks. Right, these two acts are very important for the bankers to understand how the banks are managed. Let's see various type of bank. There are four major category of bank. One is a commercial bank. Under commercial bank, we have a public sector bank like State Bank of India, Indian Overseas Bank, Indian Bank, etc. Private sector bank where we have a City Union Bank, HDFC, ICICI, etc. Foreign bank, we have a Citibank, HSBC, Dashe Bank, etc. RRB, Regional Rural Bank, which operates in a specific areas. Small finance bank, which are small finance bank and payment bank, both are comes into the existence just 3 to 4 years before. Cooperative bank, basically it was a cooperative societies are converted into a cooperative bank. Let's see one by one. Commercial bank is comes under BR Act. That business model is to make profit. The main objective is to collecting deposit from the public for the purpose of loans and investments. And mainly commercial banks are divided into public sector bank where we have SBI, IOB, Indian Bank, private sector bank like HDFC, ICICI, Kotak Mahindra Bank, foreign banks, and regional rural bank. If you go by the public sector banks are banks where government or a central government holding more than 51% of the stake, and they have 75% of the total banking business in the country. Sorry. Sorry. In terms of volume, SBI is the largest public sector bank. They are 54th largest bank across the globe, and they had a 5 associate bank, but it is all merged now under one SBI. They have some 20,000 plus branches, 3 lakhs employees working in SBI. Private sector bank, we have a new generation bank as well as a old generation bank. Old generation bank like City Union Bank, Tamil Nadu Mercantile Bank, KVB, LVB. New generation bank, HDFC, ICICI, all are new generation private sector bank. The difference between private sector bank and public sector bank is the private sector bank where the majority of the stakes is held by a private and public sector bank. 51% of the stake is held by the public. Sorry, 51% of the stake is held by the government, balance 49% by the public. But functionally, both the banks operating in the same products and areas. Let's understand the foreign bank. Foreign bank and commercial bank, or public sector bank or a private sector bank, all are in operates in the same products and same geography, and everything is remains same except the shareholding pattern. Foreign bank is the stake is held by the people who are not in India, or headquarters in foreign country, operate in India as a their subsidy or etc. Citibank is one of the oldest foreign bank. Standard Chartered Bank is there. Deutsche Bank is there. HSBC is there. There are bank like Shinhan Bank is there. It's a Korean-based bank where we have a small operation in India. Uh, these banks are under the obligation to follow the regulation of RBA, and they have to follow all the norms which RBA stipulates. So regional rural bank, the major purpose of regional rural bank to operate in rural and semi-urban areas, mainly on agricultures, and they will also issue like a debit card, ATM card, credit card, locker facilities, etc. Payment bank is a new type of bank which comes into existence. Is only for payment purposes. They also accepted restricted amount of deposit. The currently limited to 1 lakh rupees per customer. They also offer ATM, debit card, net banking, etc. Small finance bank is mainly focused on micro industries, small and marginal farmers, unorganized sectors like Equitas, AU Bank, Fincare, Ujjivan is all small finance bank. We have a good opportunities in all type of banks, and these banks comes into existence to cater the needs of Indians, and still the financial inclusion is not 100%. There is a banking need. Still, everyone is not covered under the banking perimeters. So there are good opportunity for all the banks. I hope this video is helpful to understand various type of bank. Thank you so much.